Well, greetings and salutations, Series 66 test takers. This is Dean Tinney, aka social media handle, Series 7 Guru. My colleague and peer is next to me on the screen. That's Brian Lee, managing member of Test Geek Exam Prep LLC. We've been doing some collaborations that a lot of test takers have found very helpful and very gratifying to Brian and I. They've really contributed some test taking victories. The first of those was a 65 podcast series. And that was, like I say, we found people liked it so much. We thought, well, gee, we should do the same thing on the 66. Brian also, I roped him into doing an evening class for us that you can find on the channel, definitions and registrations of persons. And he did that. And that's also been able to help a lot of test takers get their mark, make their mark. So this episode, I think, should be our first episode, relatively short. In the scheme of things, we are looking at where we're heading in this thing, and we're probably gonna have to break it up. But we think, well, this one should be, we don't know, shorter than the others. I'll just put it that way. Brian, I think one of the things you wanted to talk to first about it is the difference between FINRA and NASA.
Thanks, Dean. It's great to be back again. I had so much fun doing that podcast for the 65. I really did. And even that evening class was a lot of fun. It takes us out of our normal routine that we've been doing for almost 30 years. So it's always a lot of fun. So thanks again. I love doing these podcasts. The 66 exam, of course, are for those who have or have taken or have registered for the Series 7 only, right? So it's a limited exam for Series 7. Prerequisite, I think they call it. So we have a situation where someone who has taken the SIE exam, then has taken the Series 7 exam, passed them both, first try, boom, boom. Now they're on to the hat trick, right? Yeah. The triple crown or whatever we want to call it. And besides, they get this book that's like 2/3 the size of the Series 7. Mm-hmm. And sometimes we see folks kind of take their foot off the gas a little bit. Yeah. They go, well, I've done the SIE, I've done the 7, the granddaddy of them all. This should be a piece of cake. It's only 100 questions. Boom, and they fall flat on their face.
As you know, Brian, I do think it's a lot of hubris, as the Greeks call it, right? Pride goeth before the fall. One thing I always tell people, you got to respect this third and final leg of your testing journey, because that's very disappointing to go 2-0 and then have this be one that you don't make the mark on. So indeed.
That's exactly right. As a matter of fact, I generally tell people, and I'm not trying to scare anybody, I just use statistics. I try to be as objective as possible. But the 66 does, in fact, have a slightly lower pass rate than the Series 7 statistically say. So it's not easier just because you get a smaller book and just because it's less questions. It's just as challenging, and challenging in a different way, Dean.
Right.
NASA, the North American Securities Administrators Association, right? I say NASA, the state securities lawyers, not that NASA, right?
Yeah, right. Not taking you to space.
They're securities lawyers. The one challenge, I believe, for the Series 66 that really kind of catches people off guard is that the syntax, the way the questions are written, and the ambiguity of the answer choices are a bit more challenging than Series 7. Another way of saying that is a lot of your test prep vendors, your textbook publishers, write practice questions that are fairly close to what you see on the test.
Yeah.
On the 66, however, that gap is a little wider.
Brian, I just, it was so frustrating for this young lady. Her primary language is Mandarin. And she was studying for 66, and she would tell me that she would put some of these things into her Google Translator, and there'd be no equivalent word that would come back. And I said, well, that's because this isn't in English to begin with. I do agree with you on the legalese. And the other thing that's challenging is there is enough of overlap on the investment vehicles that they get a false sense of security. Not only your point about smaller, a quantity, but I think there's also this overlap. And then there's new concepts as well. So there's some things that you don't typically encounter on your Series 7 that you will encounter on 66. And you're going quickly on the 66, you go, oh, I know all this already. Closed-end fund, open-end fund. It's the same thing. Yeah.
It's exactly right. As a matter of fact, we talked about this on the Series 65. It's a phenomenon for both exams that if people, those who don't make the mark the first time, you often think it's the 45 question law and regs section that people struggle with. Yeah. 8 out of 10 people fail to make the mark in that investment vehicle characteristics section. How ironic is that? After just passing the Series 7,
Yes, indeed.
Just because of what you just said, there is content on the 66 in the investment vehicle characteristics section that they're not familiar with. All the different life insurance products, for one, some analysis like discounted cash flow. Where do we ever see that on the Series 7, right? So these challenges are different from the 7. We have to take that into consideration before we start letting our foot off the gas a little bit. Not just the laws and regs, but some of these other content, investment analysis, essentially. And we find that in the first section. We find it in investment vehicle section as well. So it's a challenge. Don't let your foot up off the gas. Get that hat trick. Pass this darn thing. Get this thing out of your life.
Finish strong for sure.
Exactly.
I think for our first episode today, Brian, we're starting at the beginning, which is the obvious place to start in terms of NASA's test specifications. And in this podcast episode, we're going to be talking about the intro in business information, which is eight questions. And the first of those is one of those areas, Brian, where we discuss where 7, if you tell me you missed your mark on the 7 because of a balance sheet, I'm going to say, I'm not so sure about that.
Right.
I think it's more heavily tested, I would say, on 66 than it was on 7. Your thoughts on that, Brian?
Absolutely. See, again, this is part of that investment analysis. If you think about the role that many, not all, but many investment advisor and advisor reps take is constructing structured portfolios, right? The 70-30s, the 60-40s. That's a big part of the investment advisor space. And in doing that, they have to research and analyze both stocks and bonds and alternative investments. If you kind of think about the Series 66 in that light, besides the laws and regs section, of course, I think it might help you to understand, get a little context around some of this. And you're absolutely right. I oftentimes tell people balance sheets can be the difference in passing and not passing either the 65 or, of course, the 66.
I love your comment about being holistic in that portfolio approach, because that does give you some things you can hang, the light bulbs on the Christmas trees kind of thing. Because one of the things that I think is challenging on the 66 is just that, Brian, is trying to have a narrative thread in your own mind and executing your study plan. So that idea that as an investment advisor representative that now listen, we know, Brian and I both know, the vast majority of you are not going to be portfolio managers. But, if you kind of think of it that way, I think it makes it easier to string this stuff together. So
that's right. Oftentimes you're sitting there banging your head up against the wall and pounding your feet and screaming, it's not fair. Why do I have to learn this stuff? Well, somebody out there actually does think portfolio construction may be kind of important in understanding how that analysis takes place.
Yeah.
Also, I made a YouTube video some time ago. It's still up on the YouTube channel on the importance of balance sheets, and not just the balance sheet formulas. I oftentimes will ask, if I do some tutoring, I say, what do you know about balance sheets? And somebody's going to say, assets
minus liability equals net worth.
I said, well, that's wonderful. Now tell me, what is in the balance sheet? I don't know.
Well, Brian, I'll link in the video.
Yeah. You have to know the constituents. You have to know the parts of the balance sheet.
I will link, Brian, in our video description, our podcast video description, to your video, and I have a video on balance sheets. We'll put that there for you. I also think, Brian, on the balance sheet, your point about the analysis and the working capital, and people memorize those formulas, and then sometimes they don't able to pick out what actually, they give you on the test, they give you assets, and then you have to determine which ones are current
That's
versus
right.
which ones that are not. So if
That's
you're
right.
going to do working capital, same thing, where you got to determine what liabilities are current or not.
That's right. I mean, there's enough content on the Series 7 that this should not be a discussion, right?
That's
We
right.
should know that. But again, some of the language is different on the Series 66. I mean, do we often see marketable securities under current assets in Series 7? I don't think so.
Yeah.
We might learn about accounts receivable, cash,
You're right.
inventories, but marketable securities, that's another current asset. But you got to know these parts to it in order to compute or know how to compute the liquidity ratios, such as current ratio and quick ratio.
I had a guy who was did tutoring as well, Brian, and he said, Dean, I'm not paying you to do math with me. I can do a math. You give me any two numbers, I can solve for the third. So just, let's just skip that. He passed, but he said, Dean, I wish I would have paid a little bit more attention, because that's the funny thing about math, right? There's a lot of ways to get at the right answer. And he said that he struggled a little bit because sometimes they'd ask him to recognize the formula as kind of what best describes current ratio or something. And he was able to do it, but he had to reverse engineer the math. So, I would stress that you should try and make yourself as comfortable as you can with things you're uncomfortable about. If you can put them from the uncomfortable level to the comfortable level, or, as I say sometimes, Brian, intellectually on them, as you and I both know, whatever somebody is fearful of, they're going to swear they had 100 of them.
That's right.
You told me I was going to see any alpha question. I got the 50 alpha questions.
Exactly. And your comment just brings up like 5 different points. I mean, my light bulbs are flashing all over the place. One thing about math, get this out of the way right now. Series 66, you might do one math problem.
Yes.
Period.
Right.
However, as you mentioned, you might have to recognize the math formulas. But the answer choices are not in math formulae.
Yeah, right.
They're all written out. It's not a division sign or a minus sign.
Right.
No, it says minus or divided by. And by the way, know the difference between divided by and divided into.
Oh, yeah.
That shows up in the test too. So again, as far as the math, the computation, one, maybe.
Yeah.
Okay? But you may have to recognize.
And a lot of times, Brian, I don't know if you've had this feedback as well, that I tell test takers that most of these financial ratios, current ratio, quick or acid test ratio, are within the same answer set, and one of them is a distractor. So you might get an answer set that has these liquidity ratios there, but more often than not, recognition perhaps, and then the other serves as a distractor to whatever it is, right?
Right.
And then the only other one I think that isn't about liquidity is that debt to total capital, or how leveraged is the company, so to speak, in terms of how much of the total capitalization is debt.
That's exactly right. And speaking of the gentleman who says, I can do most math, but again, it's interesting that all the textbooks have the definition for quick ratio as current assets minus inventories divided by current, not total, current liabilities, right? I mean, that's pretty simple.
Yeah.
But then there's a test question out there that lists all these current assets. And they ask, what is the quick ratio, all right, or the asset test? So what they do is they take most of the current assets, right? And they subtract the inventories from the rest of the assets, which essentially is subtracting it twice.
Right. Well,
so what I did on my quick notes, I just said current assets excluding inventory. So that way you only exclude it once. And then you get the right quick ratio. So there are different ways of saying.
That's exactly right. And by the way, that's what even if you're not a math person, I always suggest, Brian, that the good thing about math is that if you are being asked to do the math, that one of those answers is correct. And I always tell people muddling isn't to be overrated, right? So maybe you can reverse engineer it. I would prefer that you're not in that situation, but that would be there. All right. So we're ready to move on to time value of money concepts, right?
So let's just make sure we review. We got current assets and quick ratios, also known as the asset test.
Right.
There are sometimes just a simple definition question rather than the mathematical stuff. What are these for?
Right.
to determine whether a company is able to meet its short-term obligations, right? You also mentioned debt to equity ratio. That could be possible too. Know your balance sheets because you might also see it
You
under
know,
the
I tell
finance.
people too, Brian, it's testable on two levels because it's also testable on the level of, Brian, for me to do a really good job for you over time, I need to know a lot about you. What I'd like to do, Brian, is sit down as of 3:30 Monday, November 12th,
Right.
take a snapshot of where you're at. Could you tell me about your current assets?
That's
Could
right.
you tell me about your long-term assets? Could you tell me about your current liabilities, your long-term liabilities? Let's establish, Brian, your net worth,
Correct.
and then let's revisit this. And then we also can say, hey, how much liquidity are you comfortable with in terms of risk tolerance? I know, Brian, as I get older, my my want of more liquidity is makes me think of the younger man I'm no longer. Right. So I like a lot of liquidity, and that's typical, right? So
Right.
that is testable on that level as well.
Exactly right.
But if they get stuck, I tell them just go back to your own personal situation, right?
That's
You
right.
want to have to start selling off things to pay your bills. You don't want to be in that position.
You're exactly right, Dean. There's two aspects of balance sheets. One, of course, is the corporate balance sheet, which is fairly a little bit more sophisticated.
Right.
Then, of course, the personal customer balance sheet, and both of them are asked. They're both on the test. By the way, for 66 question, there is one about the statement of cash flow for a customer, right? They come in, they want to know if they can afford this major yacht they want to
Right.
purchase. Well,
Right.
my first inclination is if you have to ask whether you can afford it, you probably can't, right? But no,
Well,
they
there's a,
say,
there's
yeah,
a famous billionaire who says if it flies, floats, or fornicates, rent, don't own. I think
then.
you're right. That statement of cash flow too, as part of the test question, I usually say, we're looking when we're doing this data gathering, and part of that is statement of cash flow, is money in and money out, and see if perhaps we can't find some opportunities for maybe dollar cost averaging, for example.
Right.
That's the other part where we're going to be involved in. And then, as you know, Brian, there's that question about what doesn't go on a customer's balance sheet. What is a
Right.
non-financial kind of thing? And if
Right.
you're thinking holistically, like Brian is, right? It's in your own mind, you picture go, no, that's not a number. That's a psychosis of some sort. I'm joking, but something like that.
That's right. The challenge with this one question is that they want to know if they can make the monthly payments,
Yeah.
right?
Yeah.
So the choices are balance sheet, income statement, statement of cash flow, and tax returns are like the four choices.
Yeah.
And oftentimes people go, well, it's an income statement or a statement of cash flow. Income statement, they get down to those two answers.
That's right.
Now, again, from a finance standpoint, this might not be correct, but from a passing the Series 66 point, it's great. Customers don't have income statements, corporations do.
Right.
Customers have statements of cash flow.
That's right, because there's no net income available to common.
Right? And then the answer's not down to two anymore.
Yeah.
Because Brian said income statements of corporations, not John.
There you go. There you go.
So,
all right, we ready for time value money concepts?
Oh boy, yes.
I always start with the premise that money today is worth more money in the future. Is how I think about time value of money, and I always joke, Brian. If I had to do a serious calculation of time value, I have a buddy Lee who would do that math for me, and people say, "Well, Justine, you should be able to do your own math." And I say, "Not really." It's not so much can you do the math again. It's do you kind of understand input and output is the way I explain some of these time value money concepts. I know, Brian, you are really excellent at your explanations of these concepts. And in fact, another link I'll provide in the video description is Brian has a great little YouTube video on discounted cash flow.
This has become one of my favorite concepts on the 66. I know that's really.
You really are a test geek.
I'm not a finance major. I don't know how many times I've told people this, right? I'm a science guy. I got a science major, blah, 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 blah. So trying to understand these finance concepts to a non-finance guy, which is at least half of our population, our customers, right? So that's why I really dig into these things. It's like, okay, I'm not a finance major, but by Joe, by cracky, I'm going to understand this puppy. And I'm going to be able to explain it to somebody else who's not a finance major. Yeah. So that's why I love these things. Anyway, I am a math guy. I do use the math formula just to give me context around this thing so that I can understand it. There's no computation with it on the test, but it shows me where the parts are. And this one part that's really important on the test, it's always asked. And I go, oh, if I have 100,000 today and I want it to be $1 million 25 years ago, well, that's going to depend on what my investment return is going to be. That's that little R, what the test loves to call internal rate of return. Right. It's the necessary return that makes my investments worth the future goal 25 years from now. What we call the NPV. There's another test term. Oh my God. Now I can see it. I can see it. I can walk again. Oh my God. I can walk again. Sorry.
Yeah. No, and sometimes it comes up in the context of like, yield to maturity, on a bond or something like that. Again, mainly input and output. I'm totally with you. And you just don't want to freak out on a question. I always say, hang in there and see if there's some hack to the question, whether it's the visualization of it or whether it's, one where they have like some symmetry in the question. Like you say, 100 to 400 or 100 to 1 million. There is some symmetry in those numbers sometimes that can be helpful.
Dean, you hit the nail right on the head. It's understanding the inputs and the outputs. It's not doing some physical manipulation of a calculator.
Yeah, they're doing a calculator that's capable of doing it. Right?
Exactly.
They give you the simple function calculators. This is what you're getting.
That's right. It's a Kmart special. Oh, they don't have Kmarts anymore. God,
no,
my age.
Why? Too much leverage on the balance sheet.
There you go. That's right. Or Walmart. Or whatever.
Yeah, well, Walmart we're talking about balance sheets, and when Kmart was struggling, and Sears as well, they combined 2-week retail units, and it was just the comparisons on Walmart's balance sheet versus Kmart. I felt sorry for them. I'm like, I get it, man. Walmart's got a lot more money.
Right, that's right. So it really comes down to that I have this rate of return, the internal rate of return, that I must meet for my investments. If my current investments are not meeting that return, I'm not going to meet my goal.
Yeah.
In other words, the NPV will be negative. I have to have a rate of return that equals the IRR or exceeds it so that the NPV is 0 or positive. Now, again, if you look at my video on that, and I spell it out and I give you all the variables, I show you the inputs and the outputs, and it becomes a lot simpler.
We'll certainly link to that. I always think, Brian, when I think of internal rate of returns, I was a placement agent for private equity firms, and they're always targeting.
Is there anything you haven't done in this business?
I've lived many lives. But they always have an internal rate of return target of what they want their private equity fund to do. Your point, to take the present value of your investment in the fund to that future value. And then your point, sometimes they have positive net present value and say, hey, we were targeting 25%, we got 30%. Or we were targeting 25%, we only got 15. Now you'd think 15 wouldn't be bad, but if your point about that net present value, net always means difference, right? So if it's positive, it's going to be bueno, and if it's negative, it's going to be not so good.
That's right.
I mean, 15% is still good, but Brian's point, you won't get to that number. It'll take you longer to get to that number.
That's right. That's exactly right. So it sounds like a pretty complicated, and again, I don't want to rail on textbooks like we did on Series 65, but it's hard to explain that in a textbook. It really is. I know I couldn't understand it after reading it 16 times.
I do say I'm not going to let them completely off the hook. And here's why I'm not going to let them completely off the hook, Brian, is because, they don't give the caveat to a test taker is that this is not material to your success. Well, maybe that's not the right way to say it. Warning, don't go down this rabbit hole. Right. The test itself is a balance of easy and difficult questions.
That is exactly
and some of the test prep vendors, man, there is no balance to particularly in this category, to the nature of the easy, the medium, easy, simple questions, medium to difficult, and difficult questions. They seem to be more on the difficult side.
That's right. That's exactly right. They sure do present it that way.
Yeah.
As a matter of fact, I even got railed on social media because I was trying to present it in a simplified version for non-finance, non-MBA folks so they can pass the test. And I was told that I was the reason for the problems of the world.
Oh, you know what? I got to tell you too. The other thing that drives me
Social
nuts,
media is wonderful, isn't it?
we'll be doing some questions on a shared screen or something with a test taker. And then the rationale will say, well, while you won't encounter this on the test, I go, well, then what the heck is the question doing there?
Exactly. I've seen that a couple of times.
Yeah. All right. So descriptive statistics.
Um, there used to be quite a lot. Very often, people would get the question on medians, means, modes, range. That was such a common question. I haven't heard it in 2 years.
You know, it's funny too, Brian. So, we
Might be out there, but
I never had haters until I got on social media. I'm joking.
exactly.
I probably did. I just didn't know they were out there.
Exactly. I was thinking the same thing. I'm sure somebody out there.
Every once in a while, somebody will say, oh, so-and-so talks about this, or some test prep vendor does that. I said, well, Brian and I are on the battle lines. We're on the front lines. And so we're getting a debrief and we're getting lots of it. And so I got accused the other day, well, how come in your memory aid devices for Series 7, you don't have pro golfers don't miss pre-sale group designated member word? I go, nobody's seen it in years. So, so somebody, if you're not sure, reach out to Brian or myself. But, if we're not talking about it, there's a reason, right? There is a reason. Now, within that, though, I do think you should have of those things that is in that. We're going to talk about beta and alpha. What about standard deviation, Brian? I think that's still fair game, is it not? Or is that in this?
It's in my practice final.
You've got a great one. You got a great version of it, right?
There's several different versions of it.
I just think I tell test takers variance. It's about variance and dispersion, and volatility, basically.
It's about variance of the investment alone,
right?
External of anything outside. Yeah. Just how well does this, or how often does this thing vary? From year.
I think about you, when I'm thinking about the standard deviation, because I know you like to sometimes bet on sports teams, and I'm thinking about players. Sometimes I say, there's a player who has, they both have 20 and 10 as their average, 20 points, 10 rebounds, but one guy one night gets 40 points and 20 rebounds, the next night he gets nothing.
Right.
The other guy is 20 and 10 pretty consistently. As a coach or a better, you're thinking, okay, there's value to both of those perhaps, but what are you after, right? So I joke before the Warriors were good, I would tell people, they'd say we had Baron Davis, and people say, are you going to win tonight? I said, well, it depends what Baron Davis shows up. He has a huge standard deviation. Right. Some nights superstar, sometimes not.
So in my little world, my universe, I always think, okay, what's the easiest way to understand this? So for me, it's like, well, how much volatility you want in your portfolio? The more standard deviation means more volatility.
That's right. Which leads us to, I think, part of that conversation about beta, right? Volatility is.
Yeah.
Now it's not external, it's compared to the market.
That's right. I think beta, you'll probably see a beta calculation. I mean, if you want to, it's 1.2 times the market. So it's 120% of the market, so it goes up and down 120% more. That's a testable question on the 66.
And you know what? There's another area where test prep vendors make that more complicated than it needs to be. Where they
wait until we get to alpha. You want to talk about complicated.
Well, I always say, again, the caveat that I give is the same as Brian. We're here to help you pass the test. We don't really care, how pure we are in terms of taking the risk-free rate of return away from the market return and adding it back in.
I've had some social medias tell me I'm not sophisticated enough with my alpha formulas. This guy's got an MBA, right? He knows that long alpha. Yeah. And I say, and he wrote this to me. I said, that's wonderful. Great. I love it. But there's nothing on the test about all of these
only agenda
free returns, and none of that stuff shows up. You got to help people answer the way the question's asked. That's right. It's not about getting an MBA. I'm sorry.
And it's not about being I'll throw into the MBA category, the CFA. It's not us trying to get a CFA. And to be honest with you, CFAs, if they come to this after they've had their CFA, they too struggle because they think they're going to get all kinds of points they ain't going to get. So,
That's right. That's right.
all right. So
Okay,
beta
I'm over my little crying thing.
Yeah.
When it comes to alpha on the 66, it's about outperform or underperform.
That's right. Positive
That's
alpha
what
or
it's
negative
about.
alpha.
That's right. Positive alpha, it's outperformed.
That's
Negative alpha, it's underperformed. You just got yourself a test point if you can figure that one out. It's on the test.
I usually tell Brian, like if I'm chatting up my return to my client, and Brian says to me, "Well, Dean, I don't know why you're chatting that up." I mean, I said, "Well, Brian, why are you being such a Debbie Downer? I mean, I got 13, the market got 10." And Brian says, "Well, gee, the beta is 1.5, so negative alpha, Dean, you underperformed, right?" Or and I could chat it up if I got more. So I'm right with you. Definitely a point in play there. And I call it cherry picking. You want to pick the cherries, those questions are there. I always say, Brian, angels weep for you if you miss questions that we've told you are there that you should be ready for. I always tell people when you take a test, I always like Brian to get to the first question I know the right answer to. I go, all right, something on this test I know. Hopefully you're not 20 deep before. It looks like we're coming to the conclusion here. Last category here is valuation factors. Any other comment on beta or alpha? I think we kind of got them.
No, I think that's it. Yeah, the betas and alphas, the alphas, outperform or underperform. Absolutely.
Okay.
Yeah. Evaluation factors, PE, price to earnings.
Earnings for sure.
Too bad for a Series 7 graduate, right? I don't think there's any surprises there.
Yeah.
Book. How much the tangible assets are actually worth. I used to say, at a fire sale, how much are these assets worth, right? And then how much the stock price is above that worth, price to book, I believe. You have any?
What I usually say is if you're a fundamentalist, that you're not a member of the religious right, what you're looking for is a margin of safety when making your investment. And so that is that margin of safety in that type of value investing where the closer I can buy the company for its asset value, the more margin of safety I have.
That's right.
And so again, this is called fundamental analysis, right? And I pretty much do that. And you're thinking conservative fire sale. I just hear a recent example, Brian. I was surprised. Bed Bath & Beyond filed Chapter 7 liquidation bankruptcy, and Overstock bought the brand for $5 million. Wow. So much good. Yeah, $5 million. I thought it would be worth more than that, but we don't count goodwill, right? Whatever. But immediately they turned Overstock into Bed Bath & Beyond. People might think, oh, they rose from the dead. No, they just bought the thing. I thought, wow. I heard somebody did the same thing with Jeffrey the Giraffe of Toys R Us.
That's right. Yeah. I just talked to a gentleman, I bet you not a week ago. And he got a 68%, I think, on the Series 66. We hear those scores a lot.
We do.
And the first thing I ever think of when people tell me this, I go, okay, give me the score breakdown, right? There's the 4 categories on the content outline or test specifications. Mm-hmm. This is what we use to assess your strengths and your weaknesses. So he was running down this, and he said this first section, the one we talk about here,
right.
only has 8 questions in it. You got 1 out of 8. Well, there's your 68% right there.
Yeah.
Right? I said balance sheets, time value of money. Man, I can fix this stuff in 30 minutes.
Yeah. And it's a shame. I mean, because if we would have done it beforehand, right? They wouldn't have to do that.
That's right.
All right. So closing comments, Brian, for this episode, or
know your balance sheets. Know your balance sheets. Know your balance sheets. Know your balance sheets.
Okay, I think our next episode we had discussed is investment vehicles, and Brian and I backstage are going to figure out how we're going to break that down. We think that'll be more than one episode, but we'll figure it out for you. It'll be episode 2. It's not that hard to figure out. Then there'll be episode 3, so on, so forth. As I always say, inch by inch, your 66 is a cinch. I have to change that, Brian, because I'm building my off-grid undisclosed location on Route 66.
Oh, yes.
So I'm thinking we should start saying, get your kicks on Series 66.
Yay!
Inch by inch, the 66 is a cinch. Yard by yard, it's hard. Brian, any closing comments from the yourself?
Keep it simple. I don't care if you got an MBA or not. Stay with what you know. You take the test. Don't let the test take you.
All right, everybody. We'll see you for the next
Take
episode.
care now.
Bye-bye.
Bye-bye.